significant moves in Spirit Airlines stock. George Ferguson of Bloomberg Intelligence joins us now for more. When you look at just how drastic the move is, how unprepared were investors for this move, and what's the path forward?
Yeah, I mean, I think a lot of investors were inside Spirit Airlines, for the potential buy by JetBlue. The shares hadn't fully bridged the gap between what JetBlue was offering, as is typical. So I think and it was pretty wide for a while. And I think some people had jumped in there just on the thought that maybe the government had made a good enough case in the trial, which is, our litigation analyst Jen Rhee, who followed the trial pretty closely, thought that really the government didn't make the best case. Clearly, though, the judge now has gone for not allowing this merger, which could put Spirit's going to have some very difficult days ahead of them. I think they're in a segment of the market that's very difficult, ultra low-cost carriers. Everybody's extremely price conscious when flying them. Frontier, their other major competition, not been profitable. Spirit's not profitable as of 3Q. Next year looks rough as fares potentially falling in the U.S. market. We saw that in Delta's results in 4Q. So I think there's some pretty rough days ahead of Spirit without JetBlue.
So, George, outside of exploring legal options at this point, what comes next for these companies? And you alluded to really what comes next for the low-cost carrier market.
Yeah, so I guess JetBlue has to figure out where they want to go from here. My guess is they might be able to contest something like this. I wonder if they would, because they had put a pretty heady premium on top of Spirit, making the offer well before I think we've seen the slide in airline shares that we've seen over the last bunch of months. And so, it makes you wonder. We could be in a market that has too much capacity. The ultra low-cost carriers, I don't see it as a separate business unit. They're in there competing with, even in the back of Delta, American, United, there's a bit of ultra low-cost carrier. And so they're in there competing against everybody for the most price-sensitive customer. And right now it feels like that price-sensitive customer could be under pressure from the higher inflationary costs we've seen, higher interest rates. Maybe the job market looks like it's not as white hot strong as it was previously. I think that means that traveler may be doing less, maybe more price sensitive, and I think that's going to be a tough place to compete right now.
George Ferguson, thank you so much for your time and your analysis.